Ladies and gentlemen, good day and welcome to Lakshmi Machine Works Limited Quarter 4 of Fiscal Year 23-24 earnings call hosted by NSDL. As a reminder, please note that participants' line will be in listen-only mode and there will be opportunity to ask questions after the brief by the company officials. Should you require any assistance during the conference call and to raise questions, please signal the operator by raising hands. Please note that this call is being recorded. This is Sameer from NSDL. We have with us Mr. V. Senthil, Chief Financial Officer, and B. Lakshmi, Senior General Manager of the company. Over to you, sir.
Thank you. Good afternoon. Good afternoon, everyone, and thank you for joining LMW's earnings call for Q4 FY2023-24. We will have a brief about the overall performance of the company for the quarter and the year ended March 24, followed by an interactive session. I would like to also clarify that certain statements made and any discussions in the conference call may be forward-looking in nature. To begin with, let me explain about the overall performance of the company. Then we'll proceed to the segment performance, then consolidated performance. The financial results have been posted on the company's website and hope you have had an opportunity to go through the same. I'm happy to share that the company has achieved a turnover of 4,520 crores, which is almost flatline in comparison with the previous year. At consolidated level, it is 4,618 crores, which is again flatline in comparison with the previous year. The PBT stands at rupees 480 crores for the current year, as against 484 crores for the previous year. And on a consolidated basis, it stands at 482 for the current year, as against 519 for the previous year. I would go into the division specifics now. TMD revenue for the quarter stands at 667 crores, as against 917 crores for the previous quarter, resulting in a 27% decline. For the year ended full year, the turnover stands at 3,575 crores, as against 3,647 crores for the previous year, resulting in a slight decline of 2%. The TMD profit for the year is 314 crores, as against 344 crores for the last year. This is a result. There's a decrease of around 8.9%. Currently, we hold order book to a tune of 3,570 crores, which are lined up for execution, and the export order book of around 300 odd crores. We have, over the last 3 to 4 quarters, seen a downtrend in order intake, which is reflected in the order book position, and this trend continues as of now. The impact of cotton price and impact of cotton price and the demand on our customers has resulted in a sharp decline in both the order booking and the machine offtake. And we continue to complete the project supplies, and there is the reduction in the new, and there is also reduction in the new offtake of machines, which is resulting in lower sales. Now I move on to LMW China. With respect to the wholly owned subsidiary in China, we have clocked a turnover of 28 crores for the year, compared to 273 for the previous year, registering almost a 90% decline, with almost a 13 crores loss for the full year. Now going on to LMW Middle East operation, the company achieved a turnover of 249 crores during the year FY2023-24, as against for the current year. The value addition there is around 40%, and this is reflected in the consolidated turnover of the company. The global economic challenges remains weak, and hence the resulting weak demand. And this we see as business challenges in the export market as well for a couple of quarters, which we can discuss as we get into the questions. We have also announced a reduction in the number of working days during the month of May 2024, and currently TMD is working 5 days because of lower capacity utilization, and so is our foundry, which is working lesser number of days because of lower capacity utilization. Now, let me take up MTD division. The revenue of the division stands at 1,049 crores compared to 985 crores the previous year, which is 7% higher. And for Q4, it stands at 293 crores compared to 240 crores of the previous quarter, which is around 22% higher. We are happy to note that we have achieved the highest turnover for the quarter for this division. This has been made possible by our continued investment in this business and creating capacity for MTD. This has also been made possible by the new models which have been introduced in VMC, and we are in a position to service the non-auto sector such as oil and gas, die and mold and general engineering. With increase in manufacturing activity, we strive to achieve better turnover in going forward. And I would also like to note that in the month of May 2024, we have taken a price revision for the machines, which was on hold for 2 years. This division's profit stood at 74 crores as against 62 crores for the last year, resulting in an increase of 19%. Now, let me go to aerospace division. The revenue in this division is up by 45% from 110 crores to 160 crores. And ATC profit has clocked a profit of 14 crores as against 3 crores of last year. Export contribute to more than 90% of the turnover. And within this, the metallic division contributes to 80% of the turnover of this particular division. The order book for ATC continues to be upwards of 200 crores, which are executable over the next 18 months. I would also like to state that during the last quarter, we have put in another 5 megawatt of solar capacity, taking our total installed capacity to 53 megawatt of renewable power. And this goes on to serve 90% of our energy requirements. With this, I conclude my initial speech, and then now we can start the interactive session. Back to the moderator.
Thank you so much, sir. We would like to go ahead with the interactive session. I would request the attendees to please raise hands if you would like to ask questions after the communication of your name and unmute status. And we would request people to please go ahead with raising hands. So the first person who is ready with the question and for the interaction is Mr. Chetan Doshi. Mr. Chetan, you have been unmuted.
Am I audible?
Yes, sir, you're very much audible. We can also have your video turned on if you like.
Mr. Chetan, we are not able to hear you. Can you kindly speak a little bit louder? Yes, we can see you now.
Now I'm audible?
No, sir, you're not audible.
Hello, now?
We can hear you, sir. We can go ahead. Yeah, please.
Coming to a very specific question that is regarding ATC. See, ATC last quarter, your turnover is only 27 crores compared to last quarter, that is in December 23, that was 49 crores. Now, in that, the profit is actually you shown loss. So what is the specific reason as far as this dip in this current quarter is concerned? There were some news that we have supplied, that was in the newspaper that to ISRO we have supplied the top portion of the rocket, which is definitely a pride for shareholders and the company that is 100% indigenous. Can you speak something related to that? Because previously it was totally imported. These components were now we as a company has been able to get the order and plus execution of the sale. So this will be repetitive in nature, and what other markets we are focusing as far as this aerospace is concerned. Because we as a shareholder, this division is most promising compared to the regular one. The regular, see, that is the cyclical divisions what we are talking about, except for this machine tool and foundry division. Because textiles is always a cyclical industry. Sometimes it performs very well, sometimes there is a dip, depending on the government policies. But ATC, when we speak, and in the last conference also it was shown that it gives around 40% profitability as far as the product pricing is concerned, but it is not reflecting in the balance sheet.
Thank you for the question. Is there any other questions? So I will take down all your questions and then I'll address one by one. Any other questions, sir?
No, this only this particular.
Okay, on ATC. Thank you for the question. I think first on the ATC business, yes, I think whilst we have done the previous quarter, we had a turnover of 40 plus crores, and the current quarter we are at 27 crores. The way the business works, we generally have these long order books. Actually, it was 49.51 crores, and we have these long-term orders we have. And I did mention that sometimes there are what we call pull-ins, right? And there was a requirement in the previous quarter where we keep inventory of, and as and when there is a requirement to the customer, they are able to do a pull-in. So this business has a little bit more working capital, and why this is the reason why this happens is because these are all long lead time items in terms of inventory. So we keep a lot of inventory, we manufacture and keep, and if there's an opportunity for them to pull in because of a demand of the customer, then they pull it in, and that is where you saw that we were able to do closer to 49.51 crores of turnover last quarter. This quarter was more there were no pull-ins, and of course that has resulted in us clocking only 27 crores. And of course, yes, the information on the news, what you have seen was basically the composite output, where we had done what we call a nose cone assembly, and it was a 9-meter part with a 4+ meter width, which we have delivered in the previous quarter. But again, these are all government projects, ISRO projects. They happen over a period of time. Is there a possibility to deliver more? Of course, our facility can cater to this size of product, and when you can visualize a 9-meter by 4-meter part being assembled here and then again deassembled and then moved, and these are all parts which cannot have a failure also. They are all 100%, they have to work. So that is what gives us the capability to say that we are into the high-level precision engineering, the kind of a solution what we can give to ISRO. But to answer the question, do we see multiple of this which comes in? We can only say that we are capable of delivering multiple of these assemblies. However, it has to be based on what the government pulls in. Thank you for recognizing and asking about it. I mean, it has given me an opportunity to talk. Otherwise, I would not have brought it up. So yes, we are capable of delivering such parts. And ATC, again, last couple of years, we have invested in both the metallics and the composite business. And yes, we see a potential, and we will continue to invest in the business as and when the potential comes up. But our focus, and as what I was saying, currently we cater to both the export and domestic market. But export is predominantly the market right now. Almost 90% of our turnover is towards the export market. Like I said, the site it is long-term contracts we get there. So once you are in and you are an L1 business for this, we're able to see visibility of 4 years, 3 years kind of a visibility we get. So we are, I would say, because of that comfort, we do the export market more. But however, India does present a lot of opportunity, which we have to pick and choose for investment. And we are very clear, Mr. Doshiji, that we don't again invest specifically for any particular component or something like that. Our facilities are fungible. Like you rightly said, we can make a nose cone. Same facility we also make other parts for ISRO. So it is not dedicated exclusively to make one type of part. That's what I mean. It has to be fungible. So whatever we put in terms of capex should also be fungible for various products. And yes, there's definitely there's a good enough potential we see there, and we'll continue to invest in that.
What will be the value of this product? What we have this top portion, what we have supplied to ISRO?
So, actually, this will be closer to around a little bit less than 10 crores. But then the thing is that, see, the way we build, there is stages of build and stages of billing. So it is not that we have built anything this quarter. We have, at every stage, there's an approval process. So we build it, we build it, we build it, we build it. And this, technically, if you see, I've been doing this for a long period of time. So that is the reason, if you're trying to correlate that delivery to this quarter's turnover, it will not match because it's been built.
Some portion will be in advance, some portion will be in, 25%.
Absolutely.
Right. But it is a matter of pride, and really that Make in India initiative of government has really worked.
Absolutely, sir. I mean, that is absolutely true. But I always remind all our investors, please do consider that we've been making in India for textile machinery from 1962. I think that starts the legacy, genesis of this is not only ATC, but right from 1962 onwards, we have been doing the Make in India also, right, for textiles and machine tools and everything. But point noted, and thank you.
One last question. When you
yes,
textiles to perform back to the normal, means the demand should, when you expect it should pick up?
I think, see, it's very, very hard to predict textile machinery divisions pick up. I mean, what we have seen is that this has been one of the most prolonged downturn which we have experienced, which our closest comparison to this is 2018-19. But this has gone on almost for 9 months, or a little bit more than 9 months as well. There have been some signs from our customer side in terms of getting better spreads. But I mean, I would not want to predict sitting here when we will bounce back. But at the same time, we are doing all what we can to tighten our belts because we have seen these ups and downs, and we have to, no doubt, control our costs, which is what we are currently doing. But at the same time, getting prepared because we do see that this is unlike 2019 kind of recession. There are some positivity which is being mentioned in various forums which we do notice. So I would say let us give it 2 quarters. I mean that would be our planning. Our internal planning is we have to be sitting tight for 2 quarters and save everything for 2 quarters. Thank you, Mr. Josh. Thank you.
So thank you so much for answering the question. The next person who would like to go ahead with the question is Mr. Rushabh. Mr. Rushabh, you have been unmuted, and you will now also be able to turn on your video if you like. We are ready. Mr. Rushabh, if you could hear us. Mr. Rushabh?
Mr. Rishabh, we can't hear you.
Sir, with your
You are
permission,
on
we would
mute.
like to go ahead with the next person.
No, I think
That
he
is
is on
Mr.
mute. Just, Mr. Rishabh, you are on mute. If you could unmute, we can take your question. Mr. Rishabh, can you hear us?
Yeah, hi sir.
Please, go on, Mr. Rishabh.
Yeah, my second question is on the MTD division. We have seen that the players from the western part of the country are getting quite aggressive in terms of whatever they're sharing in terms of the growth plans, across sectors. So if you could share how are we targeting to grow across the country and what is our, at least plan for the next couple of years. And second part of the question is how much percentage of our revenues in the MTD division come from defense and aerospace sector currently, and what is the plan to scale up this, to cater to these segments in the next 2 or 3 years? Since the competitors show higher margins they have in these two segments. So if you could share your plans on specifically for these two segments. Yeah, that's it.
This is regarding machine tool division, right? And did you have
yes, MTD. Yes, MTD.
Okay. Machine tool division, Mr. Rishabh, it's a story which we have been kind of been positive about for last couple of years. In fact, we should go back to the fact that whether we call it China plus one or more sourcing happening here, we see that general engineering is something which is really doing well. And towards this, we have invested, and like I've said also in the calls before, the few players who are there in India, we have all been invested in additional capacities. Today, even with the turnover and probably clocking the highest turnover last quarter, our capacity utilization is still in the range of around 65%. So we still have closer to 35% of capacities available for utilization in this particular division. We have been quite careful and calculated in the way we have allocated capital and grown and invested in this to grow the facilities, both in terms of the assembly facilities and the machining facilities. And in this particular business, since most of it is a bought-out component, it is important that we have more assembly facilities and higher quality assembly facilities, and that is what we have established. Now, going forward for next couple of years, I think we will continue to see that as the demand goes up. Like I said, we are at closer to around 8,049 crores is what we have clocked, of which we have to take around 10% towards the foundry business. The balance is around 840 odd crores of MTD turnover. And as this keeps going up, and which we are very positive that as it keeps going up into the future, we will keep adding capacities to help us serve the customers. I think, and there is not much of investment except, like I said, the buildings and some machining which will be required for these. And we'll continue to invest in this particular business. As far as the margins in this business go, we have the reason we have seen that our margins have come down to closer to a single-digit margin is the fact that we have invested in capacities but not fully getting utilized. And that is the reason. Otherwise, yes, you would definitely see a double-digit margin, which was there in the past. But today, once the turnover comes in, operational efficiency will kick in and it will be back to the double-digit margins what we had perhaps a couple of years ago. But we continue to invest in the business, and engineering as such is going to is doing well and will continue to do well. And with respect to your question on aerospace and defense, it is not significant. We basically are almost 42% is auto segment, and the non-auto segment of around 58% is split between almost 25 different business segments. Thank you.
Hey, can I ask a follow-up?
Thank you so much, sir. Okay.
Yes, sir. You said that the capacity utilization is around 65%. So what is the reason that we are not able to fully utilize? Since we are peers, we look at the peers, they are doubling the capacity in the next 4 to 5 years, and they are running at full capacity. Why are we not able to fully? Demand is so weak currently, or what is the reason exactly, sir?
No, what I had told was, this is a business where we keep adding capacities. So let us say we are at 840 crores, and the moment we touched 1,000, we will still put additional capacities. This is not a business where you will wait for 95% capacities and then start adding capacity later. It's a good business. It's a growing business, and like I said, engineering story is going to be there in India for the foreseeable future. So we keep building. So if you look at the capex spend, what we had over last 3 years or 2 years in specific, you would see that we have invested upwards of 50, 60 crores or 70 crores in this particular business itself. So like that, we keep adding capacities. That's why you will never see that we have reached the peak capacity here. So that is the advanced planning which we do, and capital allocation with what we do.
Thank you.
Thank you. Back to you, Mr. Samit.
Thank you so much, sir. Going ahead with our next person in the attendees with the hand raised, we have with us Mr. Bhavin Mitlani. Mr. Bhavin, we are ready for your question. You have already been unmuted.
Good evening, Senthil.
Good evening, Mr. Bhavin. How are you?
Good. Very well, thank you. How are you doing?
All well, Mr. Bhavin. Please go on.
Yeah. So I joined a little late. Pardon me if I'm repeating the questions. If you can help me with data points on the TMD division to start with, on the order flows for TMD in financial year 24 and 23. Along with that, if you could also help us with the order book, pending order book as it end 31st March 24 and same period last year. And of the current order book, how much of this is executable? Because we have seen in the past that whenever the cycle kind of softens, some customers, while they have paid advance, they will ask us to go slow.
Yeah, so the current order book is 3,520 crores. And the previous order book was 3,520. There's 4,007. Just hold on. 5,500 odd crores. And you can see this based on the security deposits, what we have got, what we reflect in the balance sheet. You will be able to add the two security deposits together, that you would see that it's almost 10%. The active order book within this is around 2,300 odd crores, as against 3,500. From 2,300 to 2,400 is an active order book. And the order flow during the current year was closer to 700 crores was the order inflow for the current year.
And what is it compared versus the previous year order flow?
Previous year was closer to, I would say it is around 60% of last year's.
Okay, so current order book is 60% of last year. Now it declined by about, yeah, okay.
Yes. So it was closer to 1,300 odd crores, I think, was the last year's order flow.
Sure. And as we are seeing some, the spreads are stabilizing now. Are we seeing the customers coming and engaging with us in terms of inquiry? If you could give us some outlook on that. And as you said, we should wait for a couple of quarters before we kind of give an outlook. But the inquiry pipeline, the customer interaction, what does that suggest?
I mean, as you know, we don't give an outlook, and that's what I mentioned. But yes, the customers are interacting. It's not that we are. You see, no quarter goes without an order. So the largest textile players are still placing orders. Some of them are still expanding, and some of them are placing orders. So that work still continues. It is only that, like I mentioned, it is such a prolonged slowdown what we have seen, and it's more than 9 months. I mean, it's basically more than 3 quarters. But still, we are able to supply the project orders because when the orders came in 18 months back, there were a lot of greenfield, lot of project orders, and that continues to get installed and continues to get shipped out. And even though we had seen a decline in order inflow, we are able to still map the turnover was still almost in line with last year's because of project orders supporting it. But we see that this is perhaps is not the case now going into, because those projects are also getting completed. The new projects are kind of being pushed back, but order inflow is happening, but offtake is kind of reduced. And that's where I said it will take definitely 2 quarters for us to get, for us to go back to again good utilization, capacity utilization. We are perhaps at very low capacity utilization now, and it will take us 2 quarters to kind of give us a clarity to say how we are going to go up on the capacity utilization. That's what I meant. But discussions are happening, orders are flowing in, but as against what we ship out, that is not what we would like to see.
Sure. And could you help us with the newer products that were in the development stages and we had launched in some of the recent exhibitions and forums? I think the Airjet was also a target. Where are we in the new product launch, and how are we seeing the growth coming from these newer product launches?
Yeah. I think the 2 products, by the way, any other questions, Mr. Bhavin, so that I can make a note of it?
Sure. So if you could also help us with the breakup of the revenue on the spares, and we had a target of 1,000 crores in the spares. We were taking the efforts in terms of reducing our cycle time and response time for the customers. So if you could give us an update on that also would be helpful.
Okay. Okay. So two things which we would perhaps talk about is the Airjet and also what we call robotic auto pissing. I think robotic auto pissing is already in the market. It is available on a commercial basis. And that is basically an automation tool for all our customers. Excellent tool right now, advanced technology, because basically you can reduce the manpower and you can optimize the cost. And that is the way I think these things are going to go into the future. As far as Airjet is concerned, yes, like I had mentioned, commercial launch, it is there. It has been in a very limited manner. We have put it on test runs. I should perhaps come back to you in another 2 quarters once the commercial launch is announced. But otherwise, we are right now test piloting the product. These are the 2 products I would like to. The new products as far as TMD is concerned. With respect to the breakup of spares, the breakup is around 70% domestic because of more projects getting shipped out, around 11 to 12% of spares, and around 16 to 17% of exports. That is the breakup what we have. The fact that the utilization of the mills had also reduced, some of it going down to almost in the 60s and 70% and 80%. It had an implication on the spares business as well. So that's what it is. But otherwise, yes, the utilization of mills is has a direct bearing on our spare sales.
Just one follow-up here. the Airjet will increase our total addressable market by about 1,200 crores.
Yes, it would be possible. It would be possible.
And how about the automated casing machines?
Auto piecing is not something which is there in the market. It doesn't support. It only supports in terms of automation of a mill,
Okay.
right? I wouldn't say. I mean, it purely depends on what the customer, how automated the customer would want the mill to be. It goes as part of a ring frame machine. It's a value add to the product. So I wouldn't put a market size to that. Technically, it is like, perhaps a decade back, compact came in, and then every machine now today, most of it is compact machines, compact yarns. So like that, RAP is something which is quite advanced to reduce the manpower utilization within the mill. So that I wouldn't put a value to that to say this is the addressable market size.
Sure. Just last follow-up. What would be our market share currently in the textiles machinery division?
We are upwards of, from the delivery perspective, if you see, we are upwards of 72% in terms of overall market share. Of course, I'm just generalizing across all the mission segments.
And what would be the global share?
Global share would be lower. I mean, perhaps we are looking at. Let me get back to you, because we are just running we don't have the exact spindleage shipment data, right, which we have for India. We don't have exact spindleage data for the global for as of March for us to calculate, but we'll have to get back to you.
Well, historically, it is in that 12-13% ballpark. That's
same thing. Yes, that continues. That would still continue. It would be anywhere between 12 to 15%.
Sure, great. Yeah. Thank you so much for taking my questions. Best wishes.
Thank you.
Thank you, sir. Thank you, sir. Sir, amongst the attendees, we do not have any other hands raised as of now. Okay, now we have Mr. Manish. Mr. Manish, you have been unmuted and we are ready for your question.
Good afternoon, Mr. Manish. Mr. Manish, we can't hear you. We are not able to hear you, Mr. Manish. No, we can't hear you. We can see you. We can see you though, but we can't hear you. Still, we can see you, but we can't hear you, Mr. Manish.
So?
Yeah, now we can hear you, Mr. Manish. Now we can hear you. Yeah.
Sorry for that, sir.
No. Please go on, Mr. Manish.
Yeah. Thank you so much, sir. Sir, you just answered the revenue breakup. So can you please repeat? Was it for Q4 or for the full year? If you can give us.
Full year.
So domestic was how much, sir? 70%?
Yes, domestic was 70%. The spares was around 11-12%, and 11%, and then exports was the balance.
Okay, 14%.
Yes, 14%.
No, sorry, it should be 19%.
19%. So this you can take it as a consolidated level, because if you see export, there is also consolidated, and if you want to stand alone, then domestic will become 73 and your exports will become 16. That's the only difference.
Okay, got it, sir. Got it. And do you have the quarterly numbers, sir, please?
It is very similar. So quarterly numbers, it is around domestic is 75, export would be around 12, and spares would be around 13.
Right, sir. Okay. Like particularly for the spares, even last year we had seen a decline. So these spares would also include, these spares are reflecting only the domestic sales and it will not include the spares for exports, right, sir?
Absolutely no. Absolutely no.
Okay,
These are
so
all domestic spares only.
okay, right, sir. And sir, if you can also give us a update on the launch of the auto corner, how is it progressing, sir?
I mean, I was just mentioning in the previous question that we have put it in a couple of locations, but commercially it is not yet launched. We will see some of it getting launched perhaps in a couple of quarters, and we will definitely inform on the call once it is launched.
Okay, I thought that was you were mentioning for AirJet.
Yes. What was that?
No, I asked for the auto corner, sir.
Oh, my God, I think we should. I think Bhavin meant actually auto corner. I think it is the auto corner is exactly the same thing. AirJet, in fact, is 2 years out. So we'll have to discuss only next year. This year, we are not even discussing AirJet.
Oh, okay. That is why I was also confused, sir. And
No, I think we'll inform Bhavin, yes.
no issues, sir.
So
And
just for correction, I think it's a correction from my side. When we talk about auto corner, we are talking about auto corner, which is going to be launched a couple of quarters because it is being tested. It is not commercially launched. AirJet, we are not discussing at this moment. We will be discussing about it only next year, Mr. Manish.
okay, fine, sir. Thank you so much. And sir, in machine tool now, are we probably? I believe in past we had 80% of the revenues coming from our traditional product turning machines, and probably 20% was from machining center. So how is it now in the current year, and do we expect that going forward with improvement in the mix ratio, we can probably see improvement in margins?
Actually, Mr. Manish, the machine tool division, we have introduced a lot of VMCs, what we call machining centers, vertical machining centers. I think that is doing well, but it has not changed the mix. It still hovers between 75-25 or 80-20, depending on whichever quarter we take, depending on the projects what we supply to at that point for that quarter. So yes, it has not come to a drastically any different, but I'm happy to state that the higher turnovers what we continue to achieve is because of the new products which continue to be brought to the market by our team, and this is mainly focusing on the machining centers. But in terms of the margin, again, like I had mentioned, this margin would go back to what it was in the past only when we come to that operational efficiencies. And like I said, we are right now in the phase of building capacities and ensuring that we are able to deliver to the market. So yes, as we achieve higher turnover, that operational efficiency will kick in for us to see the increased margins.
Right, sir. And what kind of price revision have we taken, sir, in the current month, sir, after 2 weeks?
It is marginal. It is anywhere from 2 to 4%. That is the price revision we have taken.
Okay, right, sir. And last question.
Depending on various machine models.
Sure, sir. And for ATC, sir, we have done quite well on the revenue growth front. Probably we saw 45% revenue growth. So how should we expect probably this year and next year? Because we do have an order book of 300 crores and you mentioned 18 months of execution. So should we expect a high double-digit growth for current year and next year, sir? And also related question for ATC now with many opportunities seen in the domestic market from both defense and aerospace manufacturing building up in India. So are we probably also going to focus at domestic market for orders? Thank you, sir.
I think for both the questions, I think yes, the opportunity is there. That is for the growth aspect. We are at 160 odd crores. The order book is there. We have capacities to deliver. We have invested again this year. We have invested around 20 odd crores into into ATC in terms of machines alone. So we have done good amount of capital allocation. Capacities are available. So if there are no, considering the current situation, because these are all export market driven, right? Especially like I mentioned, 90% is export market driven. So long as that doesn't change, definitely we will see good growth for us too when we execute these orders. I think that is point number one. With respect to the domestic defense and aerospace business, yes, we continue to see what opportunities we have and what opportunity we can take and how we can use our capacities. And like I mentioned to the first caller as well, there is enough capacities available for us on the composite side, and that is something which we were able to support ISRO with. What you had mentioned, and these opportunities will continue to take as and when it comes our way, it's a bidding thing. We'll have to bid, we have to win, and we continue to look for such opportunities.
Sure, sir. Thank you, sir. Thanks a lot.
Thank you, Mr. Manish.
Thank you so much for answering that, sir. Thank you, sir. Our next person with the hand raised for the question is Mr. Abhineet Anand. Sir, you have been unmuted and we are ready for your question.
I can hear you, Mr. Abhineet.
Hello.
Yes.
Am I audible?
We can hear you, Mr. Abhineet, yes. Mr. Abhineet?
Hello. Can you hear me, sir?
Yes, we can hear you. Please go on. Yes, Mr. Abhineet.
Hello.
We can hear you now. Can you please go on?
Mr. Abhineet, we could hear you. Can we have a question, please? Sir, I think we've lost connection.
Yeah.
For the rest of the people we have in the attendees, if you would like to ask any question, we can have your hand raised, and we'll be taking up the questions. Mr. Abhineet?
Can you hear me, sir? Sorry for the inconvenience.
Yes,
No,
sir.
we can hear you. We can hear you, Mr. Abhineet. Please go on. Mr. Abhineet, I think we have lost you. You are on mute. Mr. Abhineet, you are on mute. If you could kindly unmute, we'll be able to hear you. So Mr. Abhineet has sent a chat message where he is, Mr. Samir, can you see that? Or I can see the question. He sent a message where he wants spindles added during the current year and what is the pricing which we are running currently. I think the spindles added during the current year is a little bit less in India. It is a little bit less than 2 million spindles. I mean, we got a fixed price on the spindles. I mean, I'm not sure what is the question. What is the pricing? What pricing it is currently? Mr. Abhineet, I'm not clear on the question. Mr. Samir?
Attendees? Yes, sir. I'm asking the rest of the attendees to please raise hands if at all we have any other questions. Currently, we do not have any hands raised, sir. And for Mr. Abhineet, sir, I'm really sorry the question couldn't be taken. You can always drop down a mail and I believe the question would be answered.
Yeah, I think we did answer that. I mean, yeah, Mr. Bhavin is back on. Yeah.
Mr. Bhavin, you have been unmuted and we are ready for your question.
So just want to get clarification. Now, AirJet you mentioned will be launched towards the...
that was the clarification I gave Mr. Manish on the call. Basically, AutoCorner. We are talking about AutoCorner. Your question basically is it's on AutoCorner, not AirJet. AirJet, we are talking about the following year. We are not discussing AirJet. We are talking about AutoCorner.
Okay. So just one more here. What would be the total market size in India for an AutoCorner as well as an AirJet?
See, AirJet, I wouldn't want to take it up now because of two reasons, right? See, AirJet actually replaces, rather the way the technology works, it doesn't spin all the counts of yarn, but at the same time, it takes up there are 3 machines which it can subsume, and that basically replaces those machines, right? That is the technology which AirJet has got. So you are basically looking at the similar market size of spindles, and if you are going to choose to run a specific count, lower count, not a very high fine count, then perhaps it would be, and also it depends on what fiber you run, and those things matter. But as far as the AutoCorner is concerned, if you look at the spindle per cost, spindle cost to set up a mill, from our up to ring frame, if you see, if you're going to spend closer to 20,000 rupees, that is spindle and of course the proprietary machines all put together. If it is 10,000 rupees a spindle, you are spending another 10,000 rupees on the proprietary segment. The spend on AutoCorner in itself would be closer to 9,000 to 10,000 rupees a spindle. If you were to set up a mill. So that would be so you can calculate almost in a mill, almost 30% would be the cost of AutoCorner going in. And that's a good potential. Of course, we have to be aware that we are coming with an completely our technology, which has been developed in-house, and we need to compete against the world's best who have been doing what they've been doing for a couple of decades, and that's where it takes us time, and we need to prove to ourselves and that machine is something which is able to deliver the ultimate quality in the yarn, because the function of that is to package the yarn, and it's a very important function in that it slices, it removes the and brings in uniformity in the yarn. Let me put it like that. It brings in uniformity to the yarn. So the post process of it becomes much more without higher efficiency in the post process of winding. So we need to ensure that we deliver the best right quality as well, and that is the purpose. So yes, 30% of the value would be to the in a spinning mill would go towards winding.
And just one more question on the machine tools. We were looking at exports, perhaps like for some of the global leading manufacturers. If you could just help us, where have we progressed? And also we were looking at moving up in terms of 5-axis machines. Any progress on that front will be helpful.
With respect to the manufacturing, yes, we are manufacturing for manufacturing for DMG Mori, and they have from one machine. It is slowly scaling up to a couple of machines, and that is something which is going on with them. In terms of turnover, out of this entire turnover, it would be perhaps around 5% of the turnover is what this would be. And with respect to the 5-axis, I think it is perhaps still under testing as well. So no comments as far as 5-axis is concerned currently.
Yeah. Thank you so much for taking my question. Those were my questions.
Thank you, Mr. Bhavan.
Thank you so much, sir, for answering the questions. Sir, there are no more hands raised amongst the attendees.
Thank you. Then we shall close the call, Mr. Samir.
Sure, sir. Since we have no further questions, and thank you so much for answering all the questions that were raised. This brings us to the end of the question-answer interaction with all the attendees. And thank you so much, sir. Thank you so much.
Thank you, everyone. Thank you, everyone, for joining the call.